Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 4th of March. So I've seen some good moves in the indices and some of the key players in the currency space this week, and some of the key levels have now been hit and rejected off. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, as we always do, and you can see that key zone that we've been talking about for a little while has certainly been hit now, and it's certainly pushed past it for a little bit, but you can see that we've seen a bit of a rejection off that level now, and it's back underneath the 200 moving average. You can see we had good respect of it up here, so the 200 moving average is definitely something that's being respected on the daily chart, and also it's a role reversal zone, no question. You know, we can see we've got very, very strong support right through here, right throughout this period in the middle of 2021. We had very, very strong support. It was resistance there, played a role here, and again it was a little bit of resistance at this point here. So look, it's going to be hard to see it break through this level without some form of pullback. What we're going to be looking for now is a bit of a change of trend to the downside. Probably a pullback to the 20 moving average makes sense. You can see here that the moving averages are basically in the center of the channel that we've got formed here, and if it comes back and tests that, that's probably a reload zone to test the tops again. Failing that, of course, if it makes a series of higher highs and higher lows above that 73.20 area, then we'd be looking at potential longs. But what I would want to see in that instance is not the first break. I wouldn't accept just a close above that level. What I would want to see is a lightning bolt form at the top. So we want to see a series of higher highs and higher lows, on a smaller time frame above the 73.20, and use that as a launching pad to go longer. Now, the next point of call for this particular currency is the 74-cent mark. You can see that there was a mini channel around that level there. I'll put a horizontal line there, and we'll actually leave it on for the next few weeks trading, just in case it does break to the high. You can see here that we've got resistance through there and support through there. You can see that it was very well respected. So around that 74.20, about 100 pips from here. Again, though, I'd want to see some consolidation around this zone and a series of higher highs and higher lows to actually make that happen. I wouldn't be just taking the automatic long, because I would probably fully expect that we're going to see some sort of a retrace from this point here and see it pull back down to the middle of the channel. So looking for a lightning bolt either way, lower high, lower low sequence below this level, trade it back down to the 20 moving averages, and of course the break up higher and another lightning bolt, and then we look for that 74.20 as the next point of call. So I think really good trading. I'm not really fussed which way it goes, actually. I think either provide a really good opportunity, and there's enough pips there on both sides, and I think the realistically both of them could play out just as well as each other. So good trading there. Just set your alerts and keep an eye out for those particular trades. All right, we'll move on now to the US Dollar Cad. This one's been an interesting one. We can see a sustained sell-off throughout the last sort of 5 or 6 days, but as you can see, though, the candles have been very full. Like, there's not much wick action here. They're very, very defined, if you like, from opens to closes, and a very, very, very full candle. So it's come down to the level that if it was going to sell off, this was the level it was going to come down to in the first instance, and it has bounced off that. You can see here around that 126. If it had broken through there, you know, down here at the 125, 14, 15 would be the area that it would probably gravitate to, but it has had definitely a bit of a pullback here. It'll be interesting to see if it can break above those moving averages. Now that it's had that sustained sell-off, what you want to be really looking for here is a break above these moving averages. If it doesn't close a daily above those, this will still be well and truly short, okay? So don't worry about going long on this until we actually get a close above this on the daily chart. So we want to see a daily close above the 20 and the 50 moving average. That will not interest me until it does that. But the shorts certainly will, because realistically, we're going down on, if you go to a 4 hour, you can see we've got a series of lower highs and lower lows, and it is now testing the 20 moving average on the way down. So it's a very key level. As you can see, you look at the 4 hour chart, and where it's at right now, I'll pop a horizontal line there to really highlight it, and you can see here that we're at a very, very important zone in the short-term trading of this one. We can see a very, very, very strong support right through here over a sustained period throughout this year. Okay, right through at the start of January, it was resistance there, and now we've got a 20 moving average and a 200 moving average and the roll reversal right on the 4 hour. So the 126.80 area is a very, very strong level for this one. So one to certainly keep an eye on. If it turns around from this point and does a series of lower highs and lower lows on a 15-minute chart or even a 30-minute chart, I would be looking to start shorting this one down to the previous lows in the first instance. And that's only a bit of a scalp, of course, but when you say scalp, I mean, by the time it does it, you know, it's probably going to be below the 126.50 area. So you're sort of looking for about a 40 or 50 pip scalp. That's what I mean by a short-term trade. That's the first stop. and that's definitely the target you'd be aiming for. But if it breaks down past that low and past the 200, it's looking very, very likely that it'll go down to the 125.20. So you can also be very mindful of that, and it could provide some really good trading opportunities either way. Again, though, for the long opportunities on this one, if we get a daily close above the 20 moving averages, then we start to look for the longs again and look for targeting the 127.80. So that's the area that we'd be aiming for in that. So really, you got to look at it at two different time frames. A small change of trend on a 15-minute to the downside, and we're going to use the 4-hour as the base and actually sell off this level. All this support, you can see that was through here. It's going to be resistance now. But if it breaks that resistance and gets above the 20 moving averages, then we're looking at the long. So very straightforward on the CAD, and I think both directions are pretty good as long as we get the confirmation. All right, over to the US dollar yen. Still consolidating in this middle zone. As you can see, it's really tightened up again. It's at the point now, at the same point really where we were last week, sitting at the 115.50 area. Hasn't broken through, but has certainly done a little bit of movement up and down in between. But price is very constricted here. You can see that there's no range at all. We're very, very tight. We're trading basically within a 50 to 60 pip range and have done so for several days now. Until it breaks out of this zone, it's very difficult to trade. In my mind, when you're getting a 50 pip range for a week, it's very difficult unless you're going for very, very short scalps. That's certainly not my trading style, to be going for very, very small scalps. If there's not at least 20 or 30 pips of comfortable pips in there, I'm not really interested. And in a 50 pip range, it's very difficult to actually get that to move in your direction. So for mine, I would rather wait for it to break through this top until it breaks past and gets a daily close above the 115.50. I'm not really interested in it. And of course, same goes on the way down. If it doesn't get a close below the 114.80, I'm not interested in it either. If it does either of those, clearly the 116.50 is the next target, and also the 113.50 is the bottom target once it breaks those key zones. And there's good trading on either side of them. But until then, you've got to keep, if you are going to trade it, you've got to be very, very mindful that the range is very, very small, and you can only really go for very small amounts of pips. So it depends on what you're doing. If you're scalping and you've got the time to do it, and you're looking at the smaller time frames and you see a series of lower highs and lower lows, say on a 15-minute chart, that's perfectly fine. But just understand where the top resistance and the bottom support is so you don't get caught out. All right, move over to the dollar index. We've seen another bit of a resurgence. It was looking a little bit weak yesterday, but you can see that we've pulled back up again, back into the 97.70 zone. It got to, as high as actually nearly 98. Pretty much all but reached the 98, looking very, very strong, smashing the euro to pieces, as we know. This is no surprise, of course. We knew that we had resistance at this point here, but it broke through there, right? Like, we know it broke through. It did it this week. It tried to pull back, but this is a very, very strong candle. And now that we're seeing this price movement, we'll move over to the euro in a second. I think it gives us a very clear direction for next week if we get that close above here. What we really want to see is this close around this level. We don't want to see it pull back to the here. If it pulls back down to the 97.20 again before the end of the week, it worries me a little bit for next week's move up. But if we get a close anywhere in the vicinity that we are now, it's looking pretty good for some good trending action next week. We'll move over straight to the euro, which is obviously the telling trade for that one, or the most logical. And it reached our zone. This is the zone we were targeting again. Reached it really easily. This has been really good trading on the euro short. 110.65 is the current level, but it did get down to as low as 110.30. Realistically, 110.50 was the actual target that we set. So you should be well and truly out of that trade if we were short. Look, if you go to the smaller time frames, it really tells the story. I mean, this is trading 101, right? Once we knew it broke a key level, this is a 4-hour chart. Look at every opportunity that you had. Once it made the series of lower highs and lower lows, you had short entry, another short entry with absolute key candles giving you the signal. I mean, far out. When you've got that shooting star there on a 20 moving average with a series of lower highs and lower lows, knowing that the big prevailing trend is down and short, it makes the trading very, very easy. So hopefully you were able to get hold of some of that. But just as importantly, our target was really easy as well. We knew we were aiming for the 110.50. We've been talking about it for weeks. So hopefully you were able to catch some of that, and it finally gave us the movement that we needed to. If you were scalping and you were just looking at the 1 hour, you had very similar opportunities, of course, but basically it was just all downhill. Any touch of the 20 moving average was giving you the trade to actually enter the euro. So hopefully you're able to catch hold of that. Now we know it's just like the dollar index was at a pretty important level. We know that 110 is very, very strong for the euro as well. You've got to go out a long way to see it, but you can see here now that we are right at this point here. This is a weekly chart. At a very important support zone. You can see here all of this price action was consistent with that. But as you can also see on a weekly chart, this is still well and truly in a downtrend, and a very serious one at that. And they are some seriously, seriously ugly looking candles. Now, we know they've been influenced obviously by world events that technical analysis has little control over. So that's why the messiness and the volatility in these last three candles. But realistically, at the end of the day, we can only look at where price is, and price is at the level where, we expected it to go, which is good when we were shorting, but we also know that there could be a little bit of confusion around this level. So you've got to treat this one with a little bit of caution now. Don't just automatically jump in the long, and also understand that the short now is under a little bit more pressure because there is strong support at this level. Okay, so just keep a bit of a watch and see on the euro, and we needed to start playing a bit of a trending game in either direction to actually get on board with it. All right, we'll move over to the ASX 200 now. This one hit a key zone as well. We had some messy candles here on the dailies. As you can see, the last few weeks have been a little bit ordinary. But we had a very, very big bullish day yesterday. And then we saw the sell-off throughout the night. Now, this is a very key zone. I always talk about key zones because they're so important. When we've got support and resistance lines drawn in, they're there for a reason, because that's where we're going to expect the weakness or the strength, depending on which direction you're going. Now, time and time again, they play out, and this is just no exception. You can see that it hit that level there. Very, very strong support right through here, as you can see. So we know it's a strong level automatically. So even though this one did break through it, that there's probably going to be some sort of resistance very, very shortly, and that came in the form of the evening action in the US, and you can see that we've had a bit of a sell-off now back into the 70, 90 sort of range. Look, this is one of those ones now where, if it's going to continue short, you're going to aim for these targets down here again around that 69.50. If it resurges and breaks through this level here and breaks past the 50 moving average, and it has to do that for mine to be convinced, it needs to get a close above the 7,200 with a daily chart to convince me that this is going to start and continue to go along and the momentum is strong enough. Then we start targeting the 73.30 area, which is this next support zone. 73.50 is also a pretty strong level. You can pretty much draw we'll pop a line at 73.50. And that's what we'd be aiming for if we get that close. And you can see why. We're just not pulling numbers out of the sky. These are support right through there, and resistance through there. So we know it's a very strong level. That's the level it will go for if we get a close above the 50 moving average. Really easy trading. But if it does continue short and we see a series of lower highs and lower lows on a daily chart or even on a 4-hour chart, we're going to start aiming down for the 69.50. So a really nice range for this one to be in, okay? Right, let's go over to the S&P 500, the last one we'll look at today. Very similar story, still in a dead set downtrend. Make no mistake, nothing has changed. Lower highs, lower lows. The 20 moving average is holding it down. It's bearing down on it. We know this is a roll reversal zone as well. We've got a roll reversal zone, a 20 moving average also pulling it down. The 20 and the 50 are still separating, as you can see, and we see a weakening candle from the overnight action. I'll blow that up a little bit so you can see. You can see that it's basically a doji candle, but the weakness was certainly there. It tried to push up past 44.20 and has ended up well down, the best part of 40 or 50 points below that. So very weak sort of move towards the end of the day, but you can see here that the 20 moving average is responsible for helping with that pull up and also the roll reversal zone. So, to me, while it's still short, I wouldn't be looking for longing opportunities. In order to go long on this one, it's got to break above the 50 moving average as well. So that's going to require a close at least above 4,500. So I'm not going to be interested in this until we get a daily close above 4,500 on the long. But on the short side, of course, if I go to a smaller time frame, we know what we're looking for here. We're looking for a series of lower highs and lower lows. If we get that on a 1 hour or a 4 hour, it gives us some good scalping opportunities down to the 42.70. And that's a reasonable amount of points too. Although it's a scalp, it's a reasonable move. So I think you can get some good scalping opportunities there, but just be very mindful of those key levels and trade cautiously around them, because that's where your targets are going to be in the first instance. All right, I hope everyone's had a great week's trading. I think we've had some really good opportunities. It's been technically sound and the levels have held up. Have a great weekend, and I look forward to seeing you all next week.